morning traders, Richard here doing a quick Ichimoku cloud chart market review of the Dow Jones Industrial Average Index. We're at a critical stage here. The index is now, after rebounding from old cloud chart support zone, this cluster of support here just below, above the 28,660 and 28,522, managed to get a nice rebound there, more than a 5,000 point rally and a 17% rally in the market. We're now back below the bottom end cloud chart resistance zone. And the index is now struggling. This week it dipped above there, and but it's struggling to stay above this 33,806 resistance line. There you can see that resistance zone also was a resistance zone in August, and it's quite significant, this level, because we're looking at the weekly Ichimoku cloud. We really need to see a breakout past this level and a sustained rally, and the Dow needs to trade and stay above this top end cloud chart level for us to be ultra bullish on the weekly Ichimoku. So the downside risk is if this resistance hold, it might come back to test that 33,316 and then 32,182 and then 32,106 here, the bottom end of the cloud. So that's the downside risk. If the resistance holds there, we could drift back down to 32 and then maybe rally into the year end. So we do need to see some form of a consolidation of this strong move, and a let's say a 38% Fibonacci retracement roughly will bring us around about to this 32,104, 106 zone there. So that's the downside risk target if resistance holds here, and if the index can't get through there and stay above this 33,806 resistance zone, this top end cloud chart resistance zone. So that's the scenario on the weekly. If we turn to the daily, give some idea, you can see there the index ran into a bit of trouble there with that resistance zone there. The 33,243 managed to break past that zone. That can come in as a potential support zone, but the downside risk, if we see a consolidation of this entire move, we can dip back down to this cloud chart support level of 32,217 and 32,106 and 31,963. So these resistance levels is now new support levels. Note how the Dow rebounded from that support zone there. So these are the downside risk targets if we get a consolidation of this move, and if the resistance at this 33,000 zone holds up, then we can see the index drifting back down to retest these support targets and then continue the year-end rally. Now what's interesting is we are back above the top end of the cloud, so we're bullish on the daily. We're still bearish on the weekly, although it did try and get above that top end cloud chart resistance on the weekly. Now if we look at the 4-hour Ichimoku cloud, you can see we had a beautiful cloud cross here, a couple of trading signals on the back of that, beautiful swing trades. Then rally got extended from the cloud, pulls back a bit, then tests this front cloud support zone. You can see that line there is the front cloud support zone. So that was a significant support zone. If I pop a line in there, just hold on, we can see exactly where that zone is. You can see there, roughly there at 32,000 roughly, and you can see how it for a couple of a day or two it did test that support zone quite strongly. And now it's a little bit extended from the top end of the cloud once again. It can dip back down to front end of the cloud on the 4-hour, so watch out for that zone there of 33,000. Could dip back down into that support zone and test that level. But these levels now, these all highs here, as well as the front end cloud, is the next cluster of support levels to watch out for a potential swing trade from those zones. If the market's very weak, we can see this cluster of support being tested in a consolidation of this entire strong move we've had recently. But so far so good. Back above the top end of the cloud, yeah, it's bullish on the 4-hour with downside risk to a cloud chart rebound from there. And on the daily, we now know we're back in bullish territory as well, with downside risk to the top end of the front end of cloud support, this old cluster of cloud chart support levels. It's only the weekly one that's still quite a significant resistance zone there. So if resistance holds, then we can dip back down to test these front end cloud chart support levels, as well as 32,106, the bottom end of the cloud. But we really need to see a sustained breakout and a continuation follow-through rally beyond the top end of the cloud. Until next time, happy cloud chart trading. Bye for now.